How do you go about driving $8 million in incremental ARR from pricing and product?
Pricing is just a device to filter, select, and monetize better those users. Features that fall on the most expensive plan are actually those for which people have the highest willingness to pay. Tell me which people for which problems do we think we have product market fit with? We're a best solution for which there's no best alternative. Hypothesis big and small, when made explicit, become a super useful alignment device. Make sure that we're building the right things and for the right people.
Hello and welcome to the show. My guest today is Ignasi Buch Mundo. He is a computational biophysicist who made the jump from academia to tech, leading product growth strategy at companies like Typeform, Pitch, and now Happy Scribe. At Typeform, he drove a staggering $8 million in annual recurring revenue through pricing and packaging. He has built and scaled teams and helped drive some truly incredible outcomes. Today, we're going to learn from the lessons he's had over a fascinating career spanning academia, tech, and product for some of the world's fastest growing companies.
Ignasi, welcome to Learning at Scale. It's great to have you.
Thank you. Great to be here.
Here in Barcelona.
Yes.
Before we started recording, we were talking about this crazy stat about your time at Typeform, driving $8 million in incremental ARR through pricing and product strategy. And I'm just curious, how do you go about driving $8 million in kind of incremental ARR from pricing and product?
That's a great story and one that I remember very fondly. You do that, first of all, on top of an absolutely amazing product, and Typeform pretty much sells itself. People know about the brand, and the product is pretty straightforward and very desirable. And so that acquisition, demand gen power. What we did, though, were a couple things. And we approached that project from a first principles point of view. Okay, what is this product? What kind of value people are getting? And let's identify that value. And let's align pricing with the value that users get. And let's find the optimal price point that enough people will be willing to pay for. And that's going to maximize the returns for the companies. And so we did that through a long quantitative and qualitative combined study and a series of online experiments that then ended up shaping the pricing that then were released, which happens to still be the one that Typeform uses 3 or 4 years after.
So you're testing entirely different pricing models then at that time?
At the time, not different pricing models, but we were implementing a hypothesis on value-based pricing, basically. And people would pay for the value that they get. Basically, we would align pricing to the responses in that case that people were collecting with Typeform. And so how many responses and what's the price point, let's say, for each level of responses adjusted to the reality of the customer base. And so that was something that had been publicized, but it was not really made effective. And the limits that had been applied before we came in were not really effective. People were not hitting those limits. And if they hit them, nothing would happen. And so it wasn't really made effective. And we doubled down on that idea and studied and confirmed that responses was the right value metric to charge people for. And then we determined what were the optimal response levels for each plan. And then on top of that, other value dimensions in the sense of, okay, what else people find value in paying for when they use Typeform? Is it like the fact that they can remove Typeform branding and add their own branding? Is it that they can collect analytics on the forms? We identified adherence and preference for those features and the willingness to pay. And then we package them on different pricing plans. And so we have this that, optically and then in practice tiers users on the volume of responses that they collect. And so they pay more the more responses they collect. But it also helps people choose the right plan for them given the features that it has. And that's optimized. And so that the features that fall on the most expensive plan are actually those for which people have the highest willingness to pay.
So it seems like at a really basic level, you're using this analysis to find the breakpoints, whether it's at 50 responses or 100 responses. Is that reasonable assumption? Is that kind of what you're talking?
That's what we did, yes.
Okay.
And so we studied how many responses. We were lucky to have had a period of time that there were no limits on responses. So we could see who actually collected how many responses where there were no limits. And so we understood in a very fine level of detail how many responses were people collecting with what frequency. And so we knew what sort of to expect for new batches of users coming in. And then we did a study, a feature preference and willingness to pay study that we presented people with options of different features. And then we asked them a series of questions on like how much would they be willing to pay for the product. And then we made that association, basically correlation of like preference for certain features correlated with higher willingness to pay. And so we had the two together. Basically, we combined these into the plans.
So you're both running experiments in the wild and then just asking customers.
Right, exactly. And then when it came to actually putting this in practice, we separated the study, the qualitative study, quant-qual study of which features and analysis of like how many responses. But then we started with experiments in the wild on applying limits to those responses and seeing the actual effect. So we didn't change plans. We just made effective some limits that had been publicized, because we had to also build the architecture to be able to count responses and limit on responses. Nothing of that was built. Right. So that was part of the work. And so we started with those experiments and we saw that, yes, like people, like when they were approaching or hitting the limit, they were willing to expand their plan and pay for more usage, because it aligned with the value that they were getting. And so that gave us the final confirmation that the whole hypothesis for those plans based on responses and upselling motion based on responses would be effective. And so then we concluded the qualitative work where we finished the proposal of the new plans, we readjusted the level of responses, and then we launched the new experiment with a new set of pricing plans after having also like generated some revenue and generated some proof that responses were truly a good value metric to price on.
I have a lot of questions about this. I think my most burning one, though, and I don't work on kind of the product side of this, but in my day job on the marketing side, I think statistical significance and statistical terms in general are thrown around very loosely, and people like the way they sound, but I don't know that they would actually stand up to any kind of rigorous analysis, and people are A/B testing themselves to death, and it's a couple percent here, a couple percent there, and it's all just more statistical noise than it is actual movement if you're doing little things like changing button colors on landing pages and so on. But nonetheless, when you're making these really big, fundamentally really big business decisions or seeking to based on data, how do you go about parsing out signal from noise? And I'd imagine that at a product like Typeform, you have B2B users, you have consumer users, everything from huge companies to someone that is setting up a Typeform for their book club. And within that, then there's all kinds of embedded seasonality and day of the week and a million other factors that could influence this. Before we even get into something like you have, if I remember correctly from being a Typeform user, you have breakpoints on the responses, but there are also other features at different levels. Exactly. With all these kind of moving parts, how do you make these rigorous decisions and make sure that it's not, that you're getting signal, not noise?
Yeah, carefully, very carefully. So the one key aspect in doing this, and for anyone who could be thinking about doing this, the first that you want to get right is your data foundation. You want to make sure that you understand your user base, that you collect data on them, firmographics data and usage patterns, etc. For that will be essential to then evaluate who is reacting to pricing in a certain way or another way and diagnose the macro view that you will then be seeing on total revenue being generated, recurrence, churn, etc. So that was a very key important point. We had done a lot of preparation studies and modeling and simulation, actually, and that was a very useful thing that we did, where we modeled a few of these dimensions and we said, okay, let's imagine that we change pricing in this or that way, and let's run a simulation based on some assumptions that people would, given their usage, would choose based on these criteria. And so we ran offline simulations, different scenarios, to see how different scenarios would likely play out, given the assumptions. That was a super helpful device for us to prioritize some sort of pricing changes versus others and to gain confidence. And then we did an actual A/B test. We did not fully randomize, in this case, pricing. It launched for some geographies, and we compared with other similar ones. But then when we did the analysis, of course, we did the analysis at the macro level of what's the revenue per user that we're generating with one pricing model versus the other pricing model, but also understanding like a long list of metrics. How's conversion to pay to the different plans, conversion to yearly plans, how's retention, how's expansion, and so on and so forth. So a long list of metrics. And then we applied segmentation on those metrics. So we look at specific segments that we cared about. How
Like
do
B2B
B2
or-
versus B2C. And within B2B, our target segment, those B2B that were likely going to be our best retaining customers. And we had all of that as well within focus. And so we knew what sort of segment we did not want to lose. We were willing to lose on like perhaps B2C because the framing and strategy was on B2B and in a particular segment within B2B. And so we were willing to lose on B2C, provided that we were still like profitable in the B2B, perhaps converting more or retaining better or expanding them better. And so you're able to do, there's always going to be trade-offs. Absolutely always. You're not like changing your pricing model and everything goes up for everyone,
Right.
everywhere. That's not happening. And that's why it's super important that you have a product strategy that's guiding this work of, okay, who do we want to attract and retain and better serve? Pricing is just a device to filter, select, and monetize better those users. But you want to have that, and then the data foundation to be able to identify them and measure them and make sure that they're getting the value that you expected from that pricing.
It sounds to me like this comes back to what I've seen you also talking about, which is this sort of philosophy of hypothesis-based product strategy.
That's right.
So you're basically saying, okay, you can't, and I think this is often what falls short in any kind of optimization these days, is there's just so much data that everyone just starts looking at the data. Step one is look at the data instead of, to your point, it sounds like step one is, what's the business case? Okay, B2B is our most profitable segment. Okay, what are the levers we can pull on that? Is that
exactly
fair?
That's fair. That's exactly that. We'll start by asking founders or leadership, whoever's responsible for this at the company, of which use cases, what kind of users are the ones that we want to attract more of, right? Much more than a simplified segment perhaps comes after, right? Which is the model by which you describe a bunch of properties of certain users. But tell me which people for which problems do we think we have product market fit with? We're a best solution for which there's no best alternative for. Who are they? What are they trying to do? And then we discover that as part of product strategy work. So if the company knows that, that's an input to this kind of work. If it doesn't, then me, myself, or people in the product team should go and figure that out. And we also did that at Typeform, where we went deep into trying to understand who should be our target users, our best users. And that was coming down to the stories of people, of what are they trying to do, their jobs to be done, what are they trying to do with Typeform, or where Typeform is a tool for them. And then from that, we make a definition of, say, okay, we're going after business users, so the B2B motion, who needs Typeform or whatever app to do X, Y, Z. And that's why they choose us. And we're unique. Our differentiators are this and so and so and so. And then their alternatives, our competition is perhaps like manual work or this other player or whichever alternative they have. And that's a bit the process of a product strategy. From there on is, okay, how do we respond as a product and as a company to that? Do we keep investing in the features that we have? Do we have to add new ones, differentiate in any way, change the product in whichever way to make it even more useful, more appealing, more sticky? And then pricing just happens to be one of these levers to the product strategy of, okay, now we price specifically for these people so that the features we price for are relevant to this segment. And if this is the segment that's willing to pay more, and we identify which features, so we'll make sure to highlight those features on the top plans, premium plans, and so on and so forth.
So step one, you're having probably a combination of quantitative and qualitative analysis, it sounds like, internally to highlight a segment where there's value, in this case, B2B.
Qualitative for sure. Let's get the stories of people.
And then step two, once you have identified one of these, it sounds like you're actually going out and you're talking to customers and you're conducting interviews
Absolutely.
and doing these things. And then that's helping to inform the hypothesis that then drives the experiments.
Exactly. It never happens in like a perfect sequence.
Sure.
So usually like companies will be like, deep into the quant analysis and then like perhaps not really understanding the stories. And then you'll figure out that actually you have to talk to users. The more you talk to users, the richer the stories that you
then
learn
something makes
become.
sense.
And then you look at data perhaps differently, right?
Okay.
The hypothesis-based part is, okay, so the whole thing is a hypothesis, right? And so when you say, I have identified this profile of user, this segment that behaves in a very desirable way for which we provide a ton of value. So my hypothesis is that if I invest more in serving better this user, my business is going to grow more, faster. So there's a grand hypothesis in here, right? So that's one. And recognizing that, it's actually very helpful and not super common, to be honest. It's very helpful for it makes you, like it helps you make high level, long lasting strategic decisions. We want to invest in this segment. And when we align everything, we expect to see so and so and so. If that's made explicit, hypothesis big and small, when made explicit, become a super useful alignment device. Now I get it. I get what you're trying to do, that your hypothesis that investing in those users will actually bring more value to the business. But then you can break it down further and say, okay, there's the big strategic hypothesis that perhaps you're not reevaluating until 6 months' time or a year time or whatever. But then you have smaller ones, right? So smaller ones could be like, if a very small one, if I change the onboarding flow into a sort of a personalization experience where I identifying these users, and then I offer them a custom onboarding experience of what they can do in app, the emails they receive, and the features that I highlight, and so on and so forth, I'll be much more successful at turning those users into happy tool users that develop a regular pattern of using your product, right? So that's a much smaller, concrete hypothesis. And so you generate a bunch of experiments for that. Now I'm going to test this, and you validate if the hypothesis is true or not. And if it's not, then you might want to understand why that was, and then adjust accordingly your strategy of, okay, we thought that personalization was going to do it, but actually this is not where the blocker to activation is. Maybe the blocker to activation is in somewhere else. Maybe there was a bug you didn't catch, right? You fix that, and then suddenly you see an improvement. That's like at the operational, if you want, micro hypothesis level. Doing that recurrently and as fast as possible, I believe, and in my experience, when we've managed to do it, it's a huge accelerator to having impact. It compounds learnings very quickly. You're able to learn very quickly.
You have a fascinating background, and I'm going to try and get your very scary title right. But was it you are a biotechnologist with a specialization in computational biophysics?
That's correct, yeah.
By training.
Yeah, by training, yeah. I don't consider myself one. I don't consider myself computational biophysics, though.
But I have to imagine that is a space that has, as we were talking about, like statistical rigor earlier. I'd imagine that is a space where you have to be very rigorous in how you set up experiments, and there's probably no messing around with kind of silly A/B tests. How did you make that jump from academia to now working in product strategy? And what do you pull from that foundation in doing this work? I'd imagine there's probably quite a lot there.
Yes, absolutely. This whole framing of work around hypothesis and tests, that comes from my scientific background, and that I would say is perhaps like the biggest takeaway from my time as a scientist. And then being rigorous in that, even if it's at the not statistical rigor level, but like the qualitative rigor level, making sure that we're intentful in that sense in what we do. Then we'll use imperfect data and imperfect testing methods, because reality is messy. And we're not trying to describe reality and publish in scientific journals, but being rigorous in, the test is about that. So we're going to look at and try to interpret the results of that. And if that's true, then X. And if that's not true, then we do Y, right? That's where I would say it's stuck with me, and it's a key trait of the way I work. When it comes to statistical rigor, and sometimes that's something, and that was a flaw, I think, or a bias that I had starting up in tech. I started as an analyst, by the way, data analyst. Okay. And so that was a flaw that I actually, because that was the only way I knew how to do this job, looking for that statistical rigor and perfection, if you want, from a scientific point of view, you have to find a balance, because it's impossible to be in that space in a tech company that's trying things fast, that doesn't always have the data, doesn't always have the time to do a more rigorous test. And it took me a few years to actually learn that. And I didn't fully grasp it until I did the transition from data analytics into product. I did that at Typeform, actually. I started at Typeform as an analyst. And a few months in, I had the opportunity to become a PM in the growth team, product manager. And that's what I did, the switch. I saw it. I had always been like working with PMs, super smart PMs, but always thinking, I think we can do things better as an analyst. I think we can do things better, more rigorous. They should have tested this and that. I was always a little bit pissed, thinking that work wasn't to polish. But when I became a PM, I saw, I
You saw the other
appreciate it.
side.
I saw the other side. I appreciate it a lot. PMs are bombarded with information left and right and expectations on delivery. PMs are expected to learn about the customer at the qualitative level, but also the quantitative level, and then deliver, work with the product team and designers and engineers to actually ship stuff and have an impact. They're immersed in pressure. And so it's the key position that has to make big and small decisions all the time with all the time imperfect data. And that was when it struck me that I suddenly started not caring about anymore rigor as much. Of course, like my level of rigor was probably higher than the average PM, but then like you simply don't have the time. You have to make a decision within 3 weeks. And if you can only collect 3 weeks of data, that's
all you got.
That's all you got. And so what's the best we can say about how something worked given that, right? And for that, there's also the statistical methods that are helpful, like more Bayesian testing or sequential testing that are perhaps a bit more robust with smaller data and working with like confidence that something's going to work. It's just about adapting to that way of working. Yeah.
So you talked there about imperfect data, and I think that's a really interesting topic because as we were talking about it, I'm not sure if it was earlier in this chat or if it was before we started recording, but I think that on my side in marketing, we see this phenomenon where people lie to themselves with data maybe because there's so much of it and it's so easy to put a nice looking chart with some good shading and some correlations on a slide deck and say that we've done our homework. But I think a statistician would be a little suspicious, rightfully so, about the conclusions that you could draw or how solid that is. But nonetheless, to your point, we're talking about tech companies. You need to move fast. There's a commercial reason we're pulling all this data. It's not to publish something in a scientific journal in 24 months or whatever it may be. So to the product manager or product team, do you have any tips on how to apply imperfect data in the short term and what signals you would look at and how you think about guardrails of being cautious about the conclusions you draw and how you apply these?
Yeah. To perhaps two aspects to that. First, confirmation bias is a thing, right?
Yeah.
We all are more likely to see things that we believe are true, right? And even more when you can pull data to actually support that case, it's very easy to get trapped in confirmation bias. So beware of that. And a way to protect from that is have your work be checked by someone else. Have someone else critique it, just as a designer would get their design critiqued by another designer so that the quality increases. With product decisions based on data, I think the same should apply. So oftentimes I will share my own, because I can sometimes pull my own analysis to support some decisions. I'm much more prone to confirmation bias than others. And so sometimes I will ask the data analyst in the team to actually ask them for their opinion or their view on the analysis that we're making. And that's very powerful. Analysts and non-analysts usually are very good at picking that up. And so I've got caught a few times, and then you go back and relook at the data and consider other factors and so on and so forth. Then the other aspect is to actually have some hygiene when it comes to working with data. And so you want to make sure that's maybe more like data analytics 101 or 102, but understand some common biases or mistakes that can be made unintentionally. That are usually very likely to skew your data. For instance, when you're looking at a conversion rate change of like you're looking at a sign-up rate of some sort or conversion to pay rates after sign-up, let's say, that's a good one. And you see it change over time. And so the immediate thought, like going up or down, the immediate thought is we broke it. Like the product changed and we shipped something that made it go up or made it go down. But there are shapes of change, right? And so if you see a change that's a sudden steep change, like a step change, that's likely to be a before and after. But if you see like a progressive decline or something that's a bit more, like it's something that you have to have experience, but it's not usually a reason you go look for, which is that your denominator of that conversion rate might have changed. You might not have the same people being exposed to that change. And so the average behavior of people that can take that change. And so the population changing changes your conversion rate. And that's a very simple but extremely powerful consideration when looking at data. And so always, if things change, make sure that it was the same population exposed to the step than you had before to the time that you're comparing. That's a very simple rule of thumb that you can apply always, even when having imperfect data are not the most rigorous. And even if you do that at the qualitative level, that's still fine. And then you can compare, I know there are these two segments dominating this conversion rate. Look at the proportion. Do you still have the same proportion from the time you're comparing to now? If the proportion change, and it changes in the direction that some had a lower conversion rate, some others had higher conversion rate, you now have higher population of the ones with lower conversion rate, then your overall conversion rate is going to go down, because that's driven by those folks, right? So there are these simple rule of thumbs, and you don't have to prove it statistically. But if things move in the direction of that, then with a less rigorous analysis, you can infer that a certain change was due to this, and then take action on that.
How do you think of all of this when inside of a company like this, there are so many experiments happening concurrently, right? And if we think about sales, product, and marketing, right? I imagine, for example, at Typeform, they're probably running, let's say, significant paid advertising. And they probably also have a sales team that's running experiments. And then you're in the middle, or at the end, depending on how you think about it, right? But ultimately, sales and marketing are trying to get people into the product. And I would imagine that, let's say with paid advertising, maybe someone goes and tests a new channel. You guys have significant budgets. So, run a successful experiment could probably mean thousands of signups. Maybe it's tens of thousands of signups. I don't know. And so you've been working on some feature, or you've been testing some feature, and then some experiment gets run, and maybe it's into an entirely new cohort. You've been having your sort of median Typeform customer coming in, and now there's several thousand of some completely new cohort that maybe the product's not for them, right? And so they just come in and they're like, what is this? I was looking for a dating app. And they just drop off, and something like that could just completely throw a wrench in the experiment. And there's all these different things happening all the time. And I'd imagine it would be pretty tough for everybody to sort of tell everybody what's going on everywhere all at once. How do you deal with that in practice?
That's reality. And this also part of these imperfect data scenarios that we were talking about, right? And you have imperfect data also in situations where you cannot account for every single factor influencing a certain experiment. And so first of all, at a qualitative level, you want to make sure that you're as aligned as possible with these teams, and that you generally know whether things are happening or not happening, and can apply qualitative judgment. Is this like sort of test or experiment, especially if they're like close by, potentially influencing ours? And so you make those judgment calls. And then when it comes to maybe, again, these acquisition experiments up in the funnel, and then your bottom of the funnel, let's say, thinking in funnels conversion, you want to make sure you have this prior knowledge of how like acquisition channel, user segments, so on and so forth, influence the conversion rate, for instance, that you're trying to impact. You want to have that prior knowledge. And you want to have a prior knowledge as well on like proportions of those channels, usually, that you have had. So that when you analyze your experiment, everyone analyzes experiments first, like with unsegmented metrics, overall conversion rate.
Right.
But if you see that change, you want to drill down a bit to see where was change coming from.
So you might actually be looking and saying, okay, normally we get 25% from organic search, 25% from meta, and then whatever the breakdown is. And then if there's a change,
there's a change, and it's a change that coincides in time with your experiment. You want to make sure that change isn't having a negative or positive impact in your experiment. You want to confirm that. But that takes a lot of quantitative knowledge about the product and familiarity with the data. So it's something that's built with time. Of course, the deeper you drill into these metrics, and the more you retest your experiment, you're actually getting the space of multiple comparisons. And that's like, there you're also very likely to get false positives, to find signal where there is none. So again, you want to be careful with that, but you want to have the prior knowledge of roughly, we know about the disproportions where so and so. This can be automated. I've never been in a company that was at the maturity level that this was automated, but this is easily, quote unquote, automatable. And big companies such as the Microsofts and Google of the world, all of this is automated. And they know, and if they need segments that need to be protected, they have totally the traffic to say, I'm going to reserve like 1% of traffic for this experiment, and these people see nothing else. Or they see other stuff, but they're constantly controlling for multifactorial analysis of what might be correlating with so they apply a lot more sophisticated statistical techniques. They have the traffic, they have the talent, they have the tools to be able to do that. Smaller company can't do that. You just have to be aware and apply the checks, but it's a bit unavoidable.
This might be a little bit of a direction change from the nitty-gritty on running testing and data, but when you think about leading product teams, especially in fast-growing companies where maybe you're the first product growth strategy hire like this, what's your approach or thought process around that team in terms of what roles are you trying to hire? We talked earlier about the foundation, so I think there's also that technical aspect of having a strong data foundation to make sure that you're, garbage in, garbage out. It feels like a multi-layered problem that is, there's technical stuff to do, there's people to hire, there's then people to train. Then on a philosophical level or cultural level, you need to instill, okay, we're going to have this hypothesis testing approach to things, which then is probably its own can of worms, because then if someone wants to run an experiment, you as the manager, you have to have some process for doing that. There's a lot of moving parts there. So maybe if you're speaking to a first-time head of product at a startup, they're the first product growth strategy hire, what would you say to them?
Yep. So the situations that I've been first in have been in product growth. And so I've always come in where there was a head of product. And so I've usually been the first product growth person, at least for these 2 or 3 latest startups. The first thing to take into account is, do we have product market fit with this product? And do we know with whom? Do we know our best customer? And what are they here for? And so that's something that if it's not there, we're probably too soon to try to drive growth. And that's probably what a first head of product or first PM should help establish. Make sure that we're building the right things and for the right people. That's one. Second element to driving growth successfully is data and a culture around data. Do we have data on our users? Do we know who they are? Do we know how they behave? What parts of the product they use more or less, frequency, engagement, so on and so forth. If we have that, then we have the 2 basic ingredients to be able to drive growth. You want to drive growth, you want to scale distribution from something that already has a good amount of retention and for which there's willingness to pay. And you need to measure what's falling short. Do you have an acquisition problem, activation problem, monetization, retention problem, and so on and so forth? And then you pick from those opportunities, and then you execute growth. And when it comes to executing in growth, it's back to what we were saying. First, the cultural aspect of, do we understand, or does the company operate in a similar or welcoming enough way to the hypothesis-based product development, which means that is there space for not knowing what's going to work and forming hypotheses based on good ideas that people have, or based on certain behaviors that we see in the data, or based on market trends, forming hypotheses around that, and then executing and testing those. Does the company and the culture allow for that kind of work? Or it's a company that's more, and a culture that's more driven by someone with a lot of influence and authority having an idea and pushing it to see it implemented, but no real hypothesis or why around it, much more than, I thought this would be cool. And so there's sometimes I found myself in companies that were very idea, very design driven and vision driven kind of work, which is great because you need that sort of energy as well. It's very powerful, but time is passing. So you don't have many chances at being wrong if you don't have a learning process. And then usually in those scenarios, what I offer, basically my way of working is a way to work that helps us learn from what we try. Even if it's a crazy idea, let's test it and let's put it out in a way that allows us to learn if it works or doesn't, and with who it works.
Right.
Then you can share back the insights and the learnings with a person that proposed the idea. And
you had
say,
this crazy idea, but at least we can then
idea,
show you
but
the numbers.
So this is the impact. It didn't have the impact that we thought it, but how about we are a bit more, quote unquote, rigorous in how we come up with ideas, expect a certain impact and test that they work or not. And so that's a very quick and easy way to bringing people in the loop in this way of working. But I don't want to discard that because ideas, people or visionary people are amazing.
Ideas come
from all kinds of places. And so you want that kind of energy, but you also want the ability to learn to then adjust accordingly.
How do you, if you're coming into any company, interview goes both ways. Companies interviewing the candidate, candidates interviewing the company. And if you're interviewing for one of these roles and you want to make sure that you're coming into a company with I say thought process or approach, because you might be the first hire or the second hire, so there might not be this grand sort of thing that they can point to and say, here's our hypothesis testing approach. What questions are you asking, or what information are you trying to find out during the interview to see if you think it's something that they truly are applying? Because I think if you ask a lot of tech companies, do you take hypothesis testing and like quantitative approach, and say, yes, we do, of course. And then you get inside and it's, oh, maybe not. Then
Exactly. Yeah, the hypothesis testing is a technical term, but never actually use it in practice. What I look for, I don't have set questions, but it usually depends on the context. But what I look for are founders in particular that have adjusted their way of working or their strategy based on evidence.
Mm-hmm.
Evidence that they gathered by like personal conversations, like one-on-ones or customer calls or attending conferences, whatever. In my experience, that's the best signal that people will be receptive to hypothesis, because they are actually doing. Maybe they don't call it that, maybe they don't know, but that's the best signal, that they're responsive to reality and they're in contact with reality. And so using evidence to adjust their strategy, because that's all you do. Like in the end, when you're executing as operator, at the end of the day, you try things out. If they work, we continue. If they don't work, you change something else, right? But it's this cycle. So I want to gather evidence that there's been evidence gathering and adjustment of the strategy. And that's usually a very good foundation to start off.
Yeah. You've had a very dynamic and interesting career from this academic background. What I would imagine would be more of a textbook training on these things like statistics and experimentation and so forth. And then you probably get thrown into the fire a little bit when you come into a startup environment and it's, okay, we need to ship a new feature every week, or we want to learn fast and move fast and break things and all this. And I imagine that was probably a big shift. And you talked about that a little bit earlier. And I'm curious if you've had any learnings along the way. Obviously, the show's called Learnings at Scale, that come to mind that just really shaped the rest of your career or had some profound influence in that way.
Yes, and it's something that I actually tell friends and family in conversations when they are in similar situations. For me, it has come down to elaborating the experience that I've had, being very conscious about how things were at the beginning. Like if I have to, like, for instance, try to persuade someone that like I will be a great addition to their team, it has come down to talking about what was the situation at company or situation X that I encounter, what were my actions, and what was the impact. Just telling that structured story adapted to the kind of problems that the company might be experiencing has been tremendously helpful. That combined with just hopping through the grapevine of the network of talking to people, like, hey, can you introduce me to that person at that company because I'm interested in what they're doing. And so that combination has helped tremendously. And the sole fact of elaborating my own experiences also helps me compound learnings faster, because I'm able to be much more aware of things that have happened, responses and impact that those have had, not just to tell the story and advancing career.
So really reflecting on what you do.
Reflecting on what I've done and telling that story. That was, I think, key, and it continues to be key in big and small settings.
Do you have any, if you're talking about startup tech, the learnings are probably abundant. If you didn't keep track of them, you might forget. Do you have a process for that? Do you keep a journal or
no? I don't keep a journal.
How do you remember them?
Just
Your brain is a hard drive?
My brain's a hard drive. I have experiential memory in that sense. So I think I'm a good pattern recognizer. Like, I'm able to recognize patterns. And so there's a pattern in this. And so I recognize a pattern, then I adjust to reproducing it naturally. And so I remember it for it. I keep repeating the behavior because I know it was successful. But sometimes I won't remember exactly how something happened, what I did, and so on. So I'll have to pull those whenever I have to tell the story. But I adjust my behavior to putting myself in situations that sort of make those reproducible. So my actions are a testament.
You remember when you touched the stove or when you got the reward?
When I got the reward.
Looking forward, is there anything that you're focused on learning about now going forward? Anything that you're really excited about? We were joking around about how we're not going to throw in buzzwords. Everyone's thinking about AI is coming for our job, but is there anything that you're really sort of passionate about or interested in figuring out at this point?
Yeah, I have a ton of experience, but I want to get better at pricing and packaging. There's a world, especially around nudging people and the behavioral economics and all of that. So I want to learn a lot more about this. It's a deep topic. I have met some amazing experts and colleagues that were extremely knowledgeable over time. And I want to get more of that. It has a lot of applications in pricing, but not only. Yeah, that's an area I'm starting to read more in.
Selfishly, I'm going to ask for some free advice there because I'm also interested in this. We're working on our first productized offerings, if you will, at Opuscope. For someone that is much more of a noob on pricing than you, where would you recommend I start?
There's this book called Nudge. That's pretty good. I don't remember the authors, but they're renowned in the field. And of course, there's Kahnemans, who passed away recently, Nobel Prize, Thinking Fast and Slow.
Okay.
That's a very good one, but it's dense. Like it's
I think I read that one in college, but it probably warrants a reread at this point.
Yes, and so that's good. There's probably more accessible books, and so I'm reading Nudge, and I know there's a few others. Most of them are variations or subsets, etc. I think I find Nudge's approach very helpful because like it's all a lot around actual examples, whereas perhaps the Thinking Fast and Slow is a lot about the science that the professors ran. And so results from college studies and so on and so forth, whereas the other one is like actual real world examples, let's say, of behavioral psychology applied. Yeah.
Is there any book that you find yourself often recommending to people?
Yes, and it's probably very frequently recommended. There are 3 books now by Marty Kagan in product. The first one is called Inspired, for anyone interested in product and getting into product management. There's Inspired, and then the second one was Empowered, maybe more for product leaders. And then the last one is Transformed, which I have not read, but the Inspired is a very good one for anyone getting into product. Marty Kagan and all the folks at Silicon Valley Product Group are all about the missionary versus mercenary teams, basically how does product work look when you have autonomy and are empowered to deliver results versus when you're a mercenary that you're told what features to build and deliver. And so that's a very strong simplification, but it tells a lot about how certain companies operate versus how others and what sort of results and impact the different ways of working and have. That's a very fundamental realization that anyone working in product would want to make sure they have clear.
Okay. A couple of great book recommendations. We've been joking around about starting the Learning to Scale book club, so maybe we'll have to. Ignasi, it's been a pleasure. I could keep asking you questions all day, but I want to be respectful of your time. Any closing remarks on product, tech, moving from academia to just the startup world or anything else?
None that we haven't spoken about, but I like perhaps a message to, in case there's any academic considering getting into tech, I would encourage everyone, if they're dissatisfied, if they don't, continue being in academia, please, and advance science and knowledge in the world and progress. But if not, like make the jump, focus on your hard skills first, and then I'm sure you'll have soft skills, and then you develop those forward. Just a message to the audience. But other than that, it's been a great pleasure. Yes. And I hope that Learning at Scale is a great success.
Thank you.